So we will start with question number 2 now. This question number 2 in this paper is based on total quality management. Therefore, before we go to the question, so let me introduce you what TQM is. Total quality management is a philosophy developed early 90s or late 1980s in Japan, along with concepts such as just-in-time. This is to ensure the quality of their products, and that's one reason Japanese vehicle manufacturers were so good in manufacturing quality vehicles because of techniques or concepts like TQM. In total quality management, let's first learn what TQM is. Total. So in TQM philosophy, we emphasize a lot on quality. So we want everyone in the organization to work on quality. That's what we call total quality management. Everyone in the organization working together on quality, that is total quality management. Total quality management. So in TQM philosophy, we strive to get 100% quality right first time. 100%. Therefore, you have to develop yourself continuously. So continuous development is one of the principles under TQM, and you want zero defects. To achieve zero defects, you need to work continuously. Continuous development, you have to develop yourselves continuously to achieve zero defects. That's the ideal state to be in a TQM environment. The total quality management, as I told you, it was developed sometimes back. If you look at now, you have different philosophies overtaking TQM, but still you have a lot to learn from TQM philosophy. And in TQM, in this particular question, in relation to this, when you get a question from TQM, bit of a theoretical or narrative question, I would like to call it narrative question. You need to know how to answer the question. You can't write a theoretical answer, you need to relate to the case that is given. These questions are given in the form of mini case studies. Therefore, when you answer, you need to relate to the case study given as much as possible. So if you look at the first question is about classification of cost. In TQM, we focus on classifying quality related cost to 4 categories. We have prevention cost, appraisal cost, internal failure and external failure cost. If you look at what are these quality cost categories and why do we do that, the reason why we do that is normally these costs are hidden inside your costing, general ledger, inside overheads. But when you extract the quality related cost separately and present separately as a quality cost report, then when you total all the cost related to quality together, you can draw management attention towards that. Then they see it and see, okay, we have spent so much on quality. How should we improve on that? To draw the management attention towards cost of quality, you can use cost of quality reports. In addition to that, there are certain costs that are not reported in accounts because accounts report only the costs that have incurred. Certain costs like opportunity costs and certain futuristic opportunity costs, like because of quality problems you are going to lose a customer. You might not be able to record it in accounts, but if you do a separate cost of quality report, you should be able to report that as well. Loss in your goodwill, loss of goodwill because of a quality failure can be reflected in cost of quality report. Therefore, you can report certain costs which are not incurred, but which you might incur, estimated cost also in this report. Therefore, you can show the gravity of cost of quality through this report. So when you present this report, you classify costs into 4 different categories. First one being prevention. Prevention and appraisal costs, we call them compliance cost. And failure cost or internal and external failure cost, we call non-compliance cost. So compliance cost can be divided into 2. First one being prevention cost. Any cost that you incur to prevent any quality problem before that happens, you call it a prevention cost. Like you design standard operating procedures, you train your employees. Those are prevention costs. You do regular maintenance of machinery, prevention. Appraisal cost, any cost that you incur to check the level of quality, you call appraisal cost. You appraise, you incur those costs to appraise the level of quality, to check the level of quality. Like if you check your raw material, if you inspect your raw material, if you inspect your finished goods, those are called appraisal cost. Then you have failure cost. Failure can happen in two different levels. One is within the company. Your quality control department would identify certain goods as failures. You call them internal failure. If you identify any item before the ownership transfer to the customer within the organization, you call it internal failure. That means it's within your control, though it costs you. Any cost that you incur to do reprocessing, that can be taken as internal failure cost if you reprocess the item. Then if a machinery is broken and you repair it, so it's broken, so internally you have failed, so now you repair it, that cost is an internal failure cost. Any cost that you incur after the product is reached to customer end, the customer detects that there's a quality failure, you call external failure cost. External failure cost. So external failure cost, that those costs, right? Those external failures do the most damage to the organization. If you look at giving like replacement to the customer handling costs, and loss of goodwill, if you estimate, those will fall under external failure cost. See, in this particular question, they have given around 6 cost items, and you are expected to classify under these 4 headings. So let's read the question first. Sharp Creations is glass processing company that offers one-stop solution to all glass requirements. It started commercial operation in 1990 as a small-scale operator, and right from the very beginning, focus was on maintaining high standards in manufacturing. So high standards in manufacturing, installation and servicing. The company has grown steadily over time and has now become the market. They are the market leader. That's the point to note. They are the market leader. So, and they are maintaining very, very high standards. SCL currently carries out mass manufacturing and heavily relies on what? Something to note, new technology and computerized systems for automated operations. So you rely on a lot of systems, new technology, and you have automated operations. The company has understood that the quality and timeliness are key success factors. They have given 2 critical success factors. What are those 2? You have to note that it's very important in a TQM environment to know what are our CSF's critical success factors. So those, the 2 given factors are quality and timely delivery. Quality and on-time delivery. The Total Quality Management Committee has suggested to implement quality management practices at SCL to optimize the key success factors and therefore achieve business excellence and customer satisfaction. So your goals are to achieve business excellence and customer satisfaction. You focus a lot on customer. The following summary quality expenses 1, 2, 3, 4, 5, 6 quality related expenses given. Required, describe current quality cost categories applicable to SCL and assess the cost, the total cost incurred for each quality cost category. So you just need to take these 6 and classify into these 4 categories I just explained, and then total under each. So you get 4 marks for that. So if you look at one by one, for warranty claims, replacement cost of the item was 4 million. Warranty claims, replacements, and the rejected items were later sold to buyer, scrap 1 million. So net is 4 minus 1 is 3. That 3 million would be an external failure cost because you had to give replacement to the customer. So number 1 becomes an external failure cost. Then number 2, 5 batches failed to produce glasses at the right size due to system failure, and resulted in rejecting 2 million worth of items by the output quality inspector. Our quality inspector has rejected, means we have failed internally, not externally. So number 2 becomes an internal failure cost. because we have rejected. Our quality inspector has rejected, means we have failed internally. Number 3, the production floor has 20 quality inspectors and the yearly wages paid to them amount to 12 million. Quality inspectors are to check, appraise the level of quality, so that goes as appraisal cost. Number 4, all incoming materials are checked at the warehouse and 2 million was paid for this service. So all incoming materials are checked at the warehouse. Incoming materials to check, to appraise the level of quality you have spent this item. So that also becomes appraisal cost. Number 4 also becomes appraisal cost. Then you have number 5, standard operating procedure for quality management was developed, anchoring 500,000. So you develop standard processes so people can follow. It prevents any quality problem before that happens. Therefore, that goes as prevention cost. Number 5 is a prevention cost. The number 6, 800,000 was incurred to improve factory workers' awareness on good material handling. Again, that is to train people. That also goes as prevention cost. That's how you do the classifications. I'll show the answer given in the exam. It's a very simple approach. Prevention, because first you explain what prevention cost, any cost, and I mean in simple terms, if you explain any cost that you incur to prevent any quality problem before that happens, you call it prevention cost. Look at your examiner says, cost incurred prior or during production in order to prevent substandard or defective products, services from being produced. Number 5 and 6. So I would like you to show the total as well, because the question specifically asks you to total this, because therefore you better show the total as well, though it's not shown in this standard answer. Appraisal cost. In our words, how do we define appraisal? Any cost that you incur to appraise, to check the level of quality, you call appraisal cost. The cost incurred as for your examiner in order to ensure that output produced meets the required quality standard, that is appraisal cost. That is appraisal cost. Then number 3 and 4, quality inspectors' wages, incoming material checks. You can classify those two as appraisal cost, and you can total this 12 and 2 and show as 14 million as the subtotal, because the question specifically asks you to do it. And then cost of internal failure. In our language, how we tell it, internal failure, any cost that you incur to rectify any quality problem before the ownership transfers to the customer, you call internal failure cost. The cost arising from inadequate quality which are identified before the transfer of ownership from SCL to the customer. So number 2, rejecting 2 million due to system failure becomes internal failure cost. Last, cost of external failure. How do we define that in our language? Any cost that you incur to rectify a quality problem after the ownership is transferred to the customer. The cost arising from inadequate quality discard after the transfer of ownership from SCL to the customer, that is cost of external failures. Warranty claim, the net amount, because you scrap it and sell and you recover 1 million, therefore out of 4 you deduct that 1 million and you take net amount as 3 million. So that's how you classify them into the cost of quality report. So let's go back to the question and let's look at the next one. Explain 4 activities to be followed when implementing total quality management concepts at SCL. I mean, there are a lot of activities. I'm sure they expect you to explain only 4 activities. When you say explain, you would apply those activities to this context. You can't just theoretically say do this and that and so on, right? Therefore, you pick, your standard answer has a lot of activities. Maybe out of that you can pick 4 activities and explain properly. So if I am to summarize, let me summarize these activities. So you start, first you need to know why we exist and what this organization wants to do. Start with your vision of the organization. If you look at it, we need to achieve business excellence, customer satisfaction, right? So you need to start with that. So we have to do everything that it takes to achieve those. Therefore, what are the steps that we are taking in terms of quality also should be aligned to your vision mission. Then comes, to achieve your vision mission, you need to be really good in your CSF, critical success factors, as given in this particular example, the case they've given on time delivery on-time delivery and quality as critical success factors. So you have to align your TQM to facilitate critical success factors, facilitate SCL to achieve these critical success factors. That can be another point, right? So likewise, you can derive certain steps. You can do a vision mission, look at your critical success factors, and then you plan everything, like you plan your systems, you train your employees, right? You do everything else to be aligned with this. So if you look at some of the other steps that you can think of, you can think of changing or utilizing your systems to be aligned with TQM practices. Maybe already I'm using technology, good technology, advanced technology, maybe I can think of whether to update or not. You can take those decisions to facilitate TQM. And you need to train your employees because they might not be familiar with TQM approach. So likewise, you can select around 4 and discuss them in relation to SCL. That's where you score your marks. You have to apply to the mini case given. If you look at your standard answer given by the examiner, it starts with strategy, vision, mission, objectives. What are the business excellence and customer satisfaction you relate to? So you have to find them from the case. The company's focus on maintaining high standards to provide quality output services. Important that all employees understand the vision. I mean, in TQM, total quality management, everyone in the organization should work together to achieve quality. One disadvantage is also that because everyone is working on quality. So emphasis on quality is too much, so you may forget to work on other parts. That can be a disadvantage. But don't mention that because we haven't asked for disadvantages of TQM here. So starting point would be that, and then CSF's critical success factors, and the given factors are high quality and timely deliveries. You apply that to the case. The company should understand that TQM should be linked. TQM processes, TQM activities should be aligned with your CSF. It should facilitate SCL to achieve their critical success factors. Then identify key customers, internal and external customers. So you have to cater for the customers, right? And understand what matters most from customers' perspective. This could be done by carrying out surveys, obtaining feedback. So you explain how you do that as well. Do customer feedback, customer service, and get input from the customers. And to link SCL specifically, we are the market leader. You can link that fact here. SCL is the market leader, means that company serves the majority of customers who look for quality and convenience. Then comes the next one, develop quality improvement plan. You need to have proper plan. This is where we are, this is where we want to go, 0 defects. If you look at, you can link them to certain quality cost because you already had failure costs linked and say we should not be incurring these costs, right? The quality improvement program at SCL should focus on reducing defects. Last year we replaced 4 million worth items. Also system failure caused rejection of 5 batches. So you should not let these kind of things happen in future. So therefore you have to incorporate those to the plan. You relate to the cost given there. You relate to the case. You can see the relationship to the case. Then assess the required change in technology, whether to upgrade or not, whether our current technologies is sufficient to cater for TQM requirements. Saying assess the required change in technology, regular maintenance enhancement of the system, regular maintenance plans, allocate sufficient funding for them. SCL already heavily relies on new technology, so that's the relationship because we already rely on this. So therefore you need to look at whether we need upgrades or not. Certain automated operation may need upgrading, especially by looking at losses due to system failures. You need to look at accuracy because there have been some system failures, so whether those are working accurately or not. Also SCL needs to consider IT environment used by others because you have to be you have to be the company that gives the best quality. Therefore you need to look at what others are also doing. The external benchmarking is also part of TQM. Therefore you need to look at what others are using, which technologies your competitors are using, which technologies are there in the world. So therefore you need to look at those as well. So that is covered in point number 5. So you don't need to write all, you can pick like 4 and you can explain properly. Then design for quality, get it right first time, 100% right first time is our target. Therefore you should do all what it takes to get there, product design, you have to design processes, KPIs, all that to achieve this. Then carry out regular analysis of waste quality, because you have to keep on analyzing them, reporting them on regular basis. Analyze waste quality standards to uncover the areas where we deviate from business strategies, where we deviate from critical success factors. So you have to do that on an ongoing basis. So you need to have a process to do regular, maybe weekly or daily analysis should be done. Then identify training development. You have to train your employee, because this concept can be new to employees. So you have to give them proper training, how to implement this, what TQM is, how to do a quality circle, what is quality circle, what is quality chain, how you cooperate with suppliers, how to cooperate with customers. So you need to give proper training to employees. Then upgrade MIS, management information systems, because you need to get continuous updates on whether we achieve our KPIs. You define KPIs on a design phase. So whether we achieve those KPIs or not, those should get reported to you on a daily, weekly basis. So your MIS system should be facilitated for that. Then have a proper allocation of responsibilities to achieve TQM objectives. Responsibility should be divided among the staff, so they should take the ownership and run this. And finally, follow quality certification programs and do regular renewal of certifications. You can obtain quality certification like ISO and work for it. So that is actually TQM. So we have given a lot of steps. So out of that, a proper discussion of 4 with an application to the case would give you 4 marks. So most important point here is that when you write, don't be theoretical, use information from the case given and apply them to the case. That's where you score your mark. Finally, they are asking as the last question, explain 2 challenges that SCL might have to resolve when implementing TQM. Challenges. I mean, what are the challenges? Think practically. And you're trying to implement something that your employees don't know, so they will not like it. There will be resistance from employees. That's the challenge. Addition to that, to do something new, initially you may have to invest. I mean, are you ready to invest? Your senior management might question, directors might question, what is the return on investment on this? So it's an investment, so you have to justify that. Funding constraints can be there. So likewise, there are different challenges, and you might not know what TQM is. You may need to get the support of a consultant to do that. Therefore, you have to explain 2 challenges. I actually told 3. There are a couple of answers given by your examiner. Employees skepticism means they are not too sure on TQM concept. Employees, I mean, they doubt about it. May perceive that these changes bring additional workload. They might think that it brings additional work. It's just additional work, no benefit to us. So therefore, and some of them might think that because we work on 100% quality and we get new machinery, so we might lose our jobs, things like that. So you have to educate them on that. Proper communication is required. Then employees may be resistant to move away from the existing practice, because anyone will have an inertia to change what they've been doing. The lack of change management agent or not administering the transition. You need to have proper change management, a good personality to lead this whole process. If not, it will be a failure. The insufficient funding constraints, absence of skilled managers on TQM. You have to train your managers or you have to hire new managers to do that. Insufficient support from senior management. If the senior management is not believing TQM, they might not support. To do anything in an organization, you need senior management, top management support. The top management, if they don't believe on TQM, it's difficult to implement TQM. Finally, lack of communication between operational staff and managers. You need proper communication between top level and bottom level. There should be proper coordination between these two to implement total quality management, and to implement anything you need that coordination, not only for TQM, which is, so that's applicable to TQM as well, and to resolve practical problems there should be proper coordination. So likewise, you can think of some practical problems and you can explain too. Even here I would say those are given in point form. In the exam, since they ask you to explain, you can explain them in the context of SCL. You can always use the term SCL, you can refer to glass industry and you can explain in your exam. So the main exam point or exam technique for you is don't be theoretical. When you say explain, you explain it and you apply to the case. Try to relate to the case as much as possible. That is the exam guideline from me. So that finishes our discussion on question number 2. So let's start question number 3. The question number 3 is based on variances. So this is about advanced sales variances. So sales volume variance, sales mix and sales quantity variances. Before we start the question, let me brief you on sales variances. So when you have multiple products, the total sales volume variance will be the summation of individual volume variances. What you can do is when you have multiple products, let's say product A, product B, product C, you can calculate individual sales volume variances and you can add them together and you come up with the total sales volume variance. And that can be further analyzed to 2 sub-variances called sales mix and sales quantity. Sales mix variance captures whether we are sold the high profitable product in a higher proportion or low profitable product sold in a higher or lower proportion or not. As an example, if the sales mix variance favorable, that means we have sold the high profitable product in a higher proportion. Let's say from my standard proportion, let's have 2 products, 70% high profitable product, 30% low profitable. But in the real sale, I've sold only 50% of high profitable product. So I've deviated from my standard mix and I've sold high profitable product in a lower proportion, then my sales mix variance should be adverse. So sales mix variance checks where your marketing efforts have been, like whether your marketing team focus on selling high profitable product. That means it's difficult to sell high profitable products. It's easy to sell low profitable products. So that is being covered in sales mix variance. So sales mix variance will tell you where we have put our efforts. So if you get a favorable variance, that means you have put efforts on selling a high profitable product in a higher proportion. Whereas quantity variance is just gives the difference in the volumes, like overall quantity. In overall, despite the product categories, so product A, B, C, you total all the units together, budgeted. Actually, if you have met the budgeted volumes, in overall, you will get sales quantity variance favorable. So quantity variance checks whether we have met the sales volume in overall or not. So overall quantity variance can be favorable, but mix can be adverse. What do you mean by that? Quantity wise we have achieved, but how we have achieved is by selling low profitable products. That's the meaning of a quantity variance being favorable and a mix variance being adverse. Therefore, when you analyze sales volume variance further, it gives more meaningful information about the efforts of your marketing team. So if you look at when you calculate sales volume mix quantity variances, there are 2 methods. Method number 1, we call that individual units method, and that is the method that we would illustrate for this particular question. Even in your examiner answer, we are seeing individual units method. So sales volume variance, that's only one way. That's the difference between budgeted units and the actual units multiplied by standard contribution. If your costing system is marginal costing, we multiply by standard profit if the costing system is absorption costing. This difference between units multiplied by either standard contribution or standard profit. That can be further divided into mix and quantity components. Mix variance, how should we calculate? Mix variance, for each and every product you need to calculate standard mix in actual sales minus actual units or actual mix. What is that? Standard mix in actual sales minus actual units into the standard contribution or profits. For each and every product you need to calculate. If your actual units are more, it's favorable. If your actual units are less, it's adverse. And then you add both together, I mean 2 or 3, whatever number of mix sub-variances together, and arrive at the total sales mix variance. So if your total sales mix variance is adverse, that means you are focused more on selling low profitable products. Then sales quantity variance, using this method, individual units method, how do we calculate the difference between budgeted units and the standard mix in actual sales? That's the same term you saw in mix variance as well, into the standard contribution or profits for each and every individual product. You have to calculate quantity variance and add them together to arrive at total sales quantity variance. If you look at budgeted units and standard mix in actual sales, if the standard mix in actual sale is high, it's a favorable variance, otherwise it's an adverse variance. So now what we would do, we will look at the question and we will apply the numbers given. Here, let's read the question. Requirement, if you read the requirement, compute sales volume variance, analyze volume variance into sales mix and quantity, explain how your analysis would vary if absorption costing system is applied instead of the marginal costing system. 3 questions. The first question being, compute the sales volume variance for the 6 months. If you look at Ventura Private Limited, export-oriented company, 2 types of tires. Because of COVID, there have been certain issues. Reduced prices given 15,000 for pneumatic tire, 30,000 per solid tire. 2 types of tires. 15,000, 30,000 selling prices are given. And budget and actual total number of units given, budget and actual. Then the profit statements given, variable cost, revenue, contribution, operating profits for profits in total given. Then last para says actual export sales during 6 month period were made, agreed reducing selling prices. CS ratios given for pneumatic and solid tires, 30% and 41 and 2/3 percentage. Okay, so I need to start with sales volume variances. This is how I would do it. So sales volume variance, I will write the formula. This is my approach to variances. I will write the formula. There is a difference between budget and the actual. In this case, standard contribution. So I need to calculate for solid tire and pneumatic tire. So I will call it P and Q. So starting with pneumatic tire. Budget 3,000, actual 25. Contribution I don't know. So I have to calculate that because I know the selling price. 15,000 for pneumatic tire. Contribution CS ratio 30%. So let me calculate contribution for pneumatic tire. 15,000 into 30%, 4,500 is it. And for the other one, solid tire, price is 30,000 multiplied by the percentage is slightly different, 41 2/3. Let's do the calculation. $12,500. So here is 4,500. So you get one answer. $2.25 million actual is low, therefore it's an adverse variance. Then for solid tires, budget 6,000, actual is more 9,200. Standard contribution 12,500. So it's a favorable variance, 40 million. Then total sales volume variance is a summation of these two. $37,750 favorable. 37,750 favorable. So we are done with sales volume variance. That's what you are seeing in the top of this slide. 37.75 million favorable sales volume variance. So why is adverse for pneumatic tires? The actual volume is less. It's a positive value we know, but actual is less, therefore is adverse. Second one, we know it's a negative value, but still actual volume is high, therefore it's favorable variance. So when you combine both, overall variance is a favorable variance. That is part number A. Then B, analyze sales volume variance into mix and quantity variances. So this can be subdivided into mix and quantity components. That's what we are going to do. So it's easy if you first write the formula and then substitute your numbers. So sales mix variance, we will use individual units method. Let's write the formula. Standard mix in actual sales minus actual mix into standard contribution. So let's calculate for pneumatic tires. So standard mix, looking at the budget, 3,000, 6,000, in total 9,000. If you sell 9,000, 3 should be from pneumatic tires. Standard mix is 3 to 9 or 1 to 3. Looking at the budgeted figures, units 3,000 and 6,000, total is 9,000. Therefore, if you sell 9, 3 should be from pneumatic. I've actually sold 2.5 and 9.2. So let me write those figures. Let me write them here. Budget and actual, pneumatic and solid, and the totals. So 3,000, 6,000, that's how I got this 9,000. Then you have 2.5 and 9,200. $11,700. The logic here is, if I sell 9, 3 should be from pneumatic. I've actually sold 11,700. How many tires from pneumatic I would have sold? Compared to the actual sales of pneumatic tires, which is 2500, into the standard contribution earlier we found for pneumatic. If you remember, 15,000 into, I'll show you that calculation again, to 30% or 4,500. And for solid, we got 30,000 into 41 2/3. So let's do the calculation. 11,700 into 3/9, that is 3,900. This is 3,900 minus 25 into 4,500, 6.3 million. Standard mix in actual sale means we would have sold 3,900, I have actually sold 25 less, therefore it's not good, it's adverse. For solid tires, standard mix, if I sell 9, 6 should be from solid tires. If I sell 11,700, how many units should be from solid? Minus the actual 9,200 into the standard contribution, which is 12,500. So 11,700 into 6/9, that comes to 7,800. So I would have sold 7,800, I have actually sold more, which is good, into 12,500, 17.5 million. Since I have sold more, it's a favorable variance. It's a favorable variance. I would have sold 7,800. As per the standard mix, I have actually sold more, it's good, therefore it's a favorable variance. Therefore, total sales mix variance is a summation of these two, 6.3 million adverse plus 17.5 million favorable. $11.2 favorable. 11.2 favorable. That's what you are seeing to your left hand side bottom. 6.3 million adverse, 17.5 million favorable. When you add both, you get 11.2 million favorable as the total sales mix variance. What does it say? Favorable variance means you have sold the high profitable product in a higher proportion. That is, pneumatic or solid tires gives you a higher contribution per unit. So we have sold solid tires in a higher proportion. What do you mean by that? I mean, if you look at the proportions, percentage wise, this is 6/9. 67%. If you look at the percentage here, 9,200 over 11,700, you will get somewhere close to 78 or 79%. Let's see how much that is. 9,200 over 11,700, 79%. So you have sold solid tires in a higher proportion. That is reflected in this favorable mix variance. That's the interpretation which is not asked by the examiner. That is for your understanding, I just mentioned. When you see this favorable variance, what can we say? We have sold the high profitable product, which is solid tires, in a higher proportion compared to the standard proportions. That is the meaning of a favorable sales mix variance, which is good. I mean, your sales team, they have put more focus on selling more profitable product. They have put more focus on selling more profitable product. That's the meaning of that. That is sales mix variance. Then we will calculate sales quantity variance looking at the information given. The sales quantity variance we will use again individual units method to calculate sales quantity variance. That is the difference between budgeted units and standard mix in actual sales multiplied by standard contribution. So if you calculate that for pneumatic tires, the budgeted units 3000, standard mix in actual sales, if you look at standard mix is 3/9 into 11,700 into actual sales into the standard contribution of 4,500. So you get one answer here. See how much we are getting? This is 3,900. Yes, it comes to 4.05 million. You have sold, but more standard mix in actual sale is more favorable variance. Then for solid tires, budgeted 6,000, standard mix is 6/9 into actual sales into the standard contribution 12,500. You get 22.5 million. If you look at standard mix in actual sale is more, therefore that's also favorable, more compared to the budget. Therefore total sales quantity variance is the summation of these two, 4.05 favorable plus 22.5 favorable in millions. $26.55. Favorable. So it says overall we have met our quantities. In overall total quantities we have met the budgeted quantities. That's true. If you look at total budgeted 9,000, we have sold actual 11,700. So we have met the quantities in overall. That's a favorable variance. And when you add these two, mix and quantity, that should get tallied to volume variance. If you look at your mix variance was how much? 11.2 favorable plus quantity variance 26.55. When you add these two, you end up getting 37.75, which is volume variance, which is summation of mix variance and quantity variance. When you add these two, it tallies with the sales volume variance. So your examiner has not asked you to show that, that's for your information. And I'll show you another way. So we are done with the calculation part in the question, which is second part, part B, 6 marks. And there's another way to get this sales quantity variance in a quicker method. I would give you a quicker method where you can calculate using weighted average for quantity variance. How you do that? Sales quantity variance, quickly you can calculate. Difference between units into weighted average contribution per unit. So budgeted units in total 9, actual 11,700. How do we calculate weighted average contribution? Looking at the standard contribution 4,500 for pneumatic tires into 3 plus 12,500 for solid tires into 6, that is the standard mix, 3,000, 6,000 divided by 9. So you need to look at the standard mix, which is 3 and 6 or 3,000, 6,000. That is your weighted average contribution. So 4,500 into 3 plus 12,500 into 6 divided by 9. 9833.333. That into this you get 26 exactly 550000. Same answer but quicker. That's the weighted average method which you can use for quantity variances, that gives you a quicker answer but same answer in a quicker manner. So this is not asked, this is for your knowledge purposes. I showed this calculation. That's not asked. For this particular question, all what you need to do is you need to show the mix variance and the quantity variance and the volume variance. And the last part of the question is explain how your analysis in B above would vary if absorption costing system is applied. The difference is what? Here you multiplied using standard contribution. If your costing system is absorption costing, instead of using standard contribution, you will use standard profit per unit. That should be your answer. Let's see what your examiner has given. Instead of using standard contribution in the above computation under marginal costing system, the standard profit after absorption of fixed production overhead, better explanation there, should be utilized when applying the absorption costing system. That's how you explain that. So that is how you do the question under sales mix variances. And for your knowledge, I have shown the weighted average method as well. That's also in your syllabus, but in this particular examiner answer, they haven't used weighted average method. Volume variance calculation is the same. Mix variance calculation is the difference between two brackets actually, standard mix in actual sales minus actual units into a difference between standard profit and the weighted average profit. So you have two arguments there to calculate mix variance. Quantity variance, weighted average method, I have already shown here, which is quicker. So if you look at to calculate quantity variance, the quickest method is weighted average method. To calculate sales mix variance, the quickest method is the individual units method. If you look at the weighted average method is quite time consuming because you need to take two differences, like two brackets, and multiply together. It involves more arguments, therefore it's better for narrative purposes. That's the reason. So mix variance, I will not show that calculation because for computations we don't really recommend mix variance based on weighted average for computational requirements because individual units method is quicker. But weighted average method is better for quantity variance for calculation. That's why I wanted to show that to you. So that finishes the discussion of question number 3.